Let's welcome Ashi Anand, founder and CEO at IME Capital on the fundamentals. And Ashi, before we come to you, good afternoon first of all, but before we come to you, let's just get a little technical and get some of our BTST ideas from our technical experts joining us on the show today. So let's get right to it. And Ruchit, coming to you first, what's some of the BTST trades that you are executing, or which are the stocks that are looking good at the moment?
Yeah, no, Exide is one stock which is looking quite positive on the charts. Last 2 days ago itself, we have seen a breakout from a descending and triangle pattern. In technical analysis, this is a bullish sign, and we expect a good follow-up move happening in Exide. So Exide can be bought as it is, auto ancillary as a theme. We believe that would remain in focus for some positive moves in the short term. So Exide can be bought at current levels with stop loss below 390 for potential targets around 418. And Zydus Life Science has given a breakout from its consolidation today. So last 6 months, the stock was trading within a broad range, and today you can see that the move has been supported by very good volumes compared to its daily average. So we expect no good follow-up move in Zydus Life Science as well. Keeping stop loss below 1,000 at 990, one can create fresh longs for potential targets of 1,070.
All right, so those are the two calls coming in from Ruchit. But Vinay, what about you? Which are the stocks that you are tracking?
Yeah, so I would recommend two mid-cap stocks. First is the Kirloskar Oil Engine. The stock has given nice breakout on the medium-term charts and has been outperforming. So it looks like that it is a fresh breakout on the chart. So Kirloskar Oil Engine around 975, 977. One can go long. I would recommend stop loss at 960 for the trading. On the upside, I'm expecting a positional target at 1045. The second pick I would choose is the Stokecraft. So Stokecraft has also given a fresh breakout on the charts, and recently it has gone, price have gone up with the jump in volumes. So quite convincing setup on the chart. So Stokecraft can be bought around 678. Stop loss I would recommend it at 665. On the upside, I'm expecting a short-term target at 714.
Okay, so those are some of the stocks that are looking good to our technical experts. But Ashi, once again, let's come to you and get in your sense of the market today. And just a short while ago, we had my colleague Prakash Priyadashi who had joined us on the show, and he was saying that there is a good chance that farm equipment could come under that 5% GST ambit from 12% earlier. Give us a sense of how this could pan out for the rural economy, because even all of these major FMCG staple managements, one commentary is constant across the board is that rural demand is doing very good while urban is just recovering. Do you think this could be a very big incremental positive coming in for the rural economy, and maybe the gap between the rural and urban demand could widen from here?
Firstly, thank you for having me on the show. And with regards the GST rationalization, especially with relation to the agri sector, I think the agri sector has been underperforming for a considerable amount of time. It has a lot of potential, but has been underperforming relative to its potential for I think many decades now. What you have seen is even post kind of COVID, the initial rural recovery was a lot weaker, and it's only over the last year that you've seen kind of the rural starting to come back. Now, what you are kind of seeing from the government, and there are multiple measures, all which kind of add on to each other, but you are kind of seeing a clear shift away from the government's earlier very strong focus on capex towards they are trying to kind of very clearly revive consumption. And within that, kind of the whole rural and the agri economy is quite important. Now, I think there is immense sense for various farm equipment to be on the lowest GST slab. That will clearly act as kind of an impetus for demand. And I think from a longer term perspective, if you're just looking at the state of India's agri economy versus other kind of emerging or developed economies, there is a tremendous amount of scope for productivity enhancement in terms of our agri yields. And you are going to need industrialization, mechanization, all of this in order to actually be able to capture that potential. Now, from that perspective, I think one, there is a large amount of untapped, unmet demand, which has been pent up over many years. You are starting to see kind of signs of the rural recovery, you are starting to see signs of a rural recovery turnaround. And this kind of move would clearly help that. So I think after a fairly long dominant position, you are going to see some amount of excitement come back around agri and rural names.
Okay, so sounding good for that space. Let's shift focus from that. And Ashi, pardon me, sorry. We have our technical expert. We have Ruchit still on board with us. Ruchit, give us a chat check on some of these stocks that are not doing well today at all. Case in point being Emami Limited, a 4% cut is what we're seeing on the stock, and this is also largely rural facing stock but on the consumption side. And we've seen a block deal or multiple block deals rather happen in this stock today. So Emami Limited is down 4%. What's the chart check looking like, and are you seeing any strength on this stock?
Well, it's not in today's trading session only, but if you look at the recent past, also the stock has been one of the underperformer, where a broad consolidation has been seen since its last 5 to 6 months. Whenever the stock comes near the 650, 640 mark, we see selling pressure over there, and the stock is not able to surpass that. So I think until we see a breakout above 650, this underperformance could continue, and no, rather the stock could continue its consolidation phase.
Okay, so that's the take coming in. Ashi, let's talk about some sectors that are in focus today. While of course IT is on a tear, it's up and away in today's trading session. What's also doing well is realty, metal, and pharma. Particularly, let's talk about Nifty Pharma, because even though we have this 27th August deadline of that additional 25% tariff hitting us, we still don't have a very clear picture on when the pharma tariff is going to come into play. Would you say the pharma sector is slightly sheltered compared to the others right now? And B, on the second note, some stocks, if you could recommend from this sector, if you don't want to get stock specific, some themes that you like, because just today we've had a note on CDMO. Select stocks are also doing well on the generic side. So what's your take on pharma?
No, sure. So I think pharma, the tariff or no tariff, right? That is a really, really interesting question. It makes immense sense for pharma to be excluded from kind of tariffs. US drug prices are already the highest in the world and by a big margin. Affordability of pharma and drugs in the US is a big problem for a large parts of the society. And kind of increasing tariffs and making what is already extremely expensive even more expensive is really not going to solve for anything. So I think one, there is immense sense for pharma to be excluded from tariffs. But if it is very, very difficult to predict what goes on in Trump's mind and what actions he'd actually take, if there were kind of tariffs to be implemented against India, that would clearly be negative. It would raise a lot of questions. It is not that easy to kind of move pharma capacities from one part of the world to the other. They are very large, long lead times to actually set up a plant, to get the approvals, etc. So I think it's fair to go with a reasonable base case saying that large aggressive pharma tariffs, especially the kind of numbers being thrown up in the media, etc. I think one can assume that there's a fairly low chance of that happening. If it does kind of come into play, that would clearly be disruptive for the sector, and I think it will also be quite disruptive for pharma availability of medicines in the US. Now, in terms of themes, I think it is important to, if you look at pharma, to be quite picky about both the specific themes and the kind of stocks that you are looking at. I think there is one important base effect of Revlimid, which will kind of make growth for a lot of pharma companies supplying just to the US quite difficult. So I think, firstly, when you are looking at pharma, it is very important to kind of understand at a company level, do those companies have an interesting kind of pipeline of launches that can actually make up for the kind of negative deflationary impact Revlimid is going to have on pharma companies over the coming years? So this is really the kind of US generic plays, and I think within that, companies with greater presence in biosimilars, in inhalations, in some of these more complex therapies, those actually become interesting. CRAMS is clearly a very interesting opportunity. Within CRAMS and also in branded generics, you are going to have a very large opportunity come out over the next 1 to 2 years in terms of GLP therapies actually going off patent, and both the branded generic markets in both India and kind of other emerging markets actually opening up. This is a very, very large opportunity, and being able to understand who the winners are going to be in this opportunity uh, uh, is actually quite an interesting area within the overall pharma space. So I think specifically kind of CDMOs and branded generic players that can really leverage the whole GLP opportunity are also quite interesting. So this is kind of the space that we are. These are kind of spaces we're looking at within the pharma universe.
Okay, so that's some of the themes, and that's a take on pharma coming in from Ashi. Ruchit, what about your take on some of these pharma stocks and how are they shaping up on the charts? Today you have GSK Pharma that's in focus. They forayed into the oncology segment, launched 2 drugs in the same as well. Which stocks are looking good to you from the pharma pack?
Yeah, so I think pharma already has been one of the sector which has not largely performed along with the market up move in last few months, mainly because of a lot of concerns regarding what would be the tariff hike on these pharma names from the US. But the risk reward ratio post this recent underperformance has turned favorable in many of the stocks, particularly in frontline stocks such as Zydus Life Sciences there, or even recently we witnessed a good run up move in Glenmark Pharma where some correction has recently taken place. So we believe that stocks such as Zydus Life is there, Glenmark Pharma is there. This would show some move going ahead. So the risk reward ratio completely is favorable for creating fresh longs. Since these have not rallied much since last few months. So we prefer stocks such as Zydus Life as well as Glenmark from the entire pharma basket.
Yes, those are some of the stocks that Ruchit is liking. Ashi, I understand this is very short term in nature, but if one has to relook at their portfolio before this 27 August deadline for the tariffs, given that it's a trading holiday for us on account of Ganesh Chaturthi, in essence, our viewers only have time right now for the last 10 minutes or so and tomorrow. How should one, if at all, be approaching this tariff situation and making any changes, if at all, to the portfolio? Or would you right now recommend a rather wait and watch approach?
So yeah, it is going to be. It's obviously very difficult. One is a very short term. Secondly, it is a bit of a 0-1, right? Either you're going to have one of two or three outcomes. The first outcome is that this additional 25% tariff gets kind of lifted and really is not implemented. That would be seen as a kind of positive for the markets. You're likely to see a bit of a recovery, a bit of a rally off that. The second alternative is that there is kind of the additional tariff does stay without any clarity on when it's going to be removed. That would be kind of seen as a negative and you'd see a downward move. And the third kind of alternative is, as Trump has done very often, you just go and delay the implementation, give another 30 to 60 days. I think importantly, while there is clearly the potential for an up move or a down move, at least at this point in time, we don't see this as being very considerable. Markets seem to have taken an overall view with relation to tariffs that there are certain sectors which are getting very badly and directly impacted. But because those sectors don't really comprise a very significant part of either the overall economy or also of overall market composition, more important from a market perspective, you are likely to see some moves, but at an overall market level, I think these moves may not be very pronounced. Yes, it will be an up or down day on Thursday, depending on what happens with the tariffs. But you may not see a big follow on of that buying or selling based on what happens. But clearly, from a positioning perspective, for anyone with exposure specifically to companies with US exports, those are companies that are going to see a very high degree of volatility. As kind of long-term investors, we prefer not taking calls that are not dependent on external factors. And kind of because there is a high sensitivity to what happens on Wednesday, we would actually not recommend carrying a lot of these weights going into the holiday.
The take on what the approach to this entire tariff deadline could be and should be rather. And before we wind down, Ruchit, give us a sense of where do you see the levels for tomorrow on the Nifty? Do you believe the fear that investors have about this 27th August deadline could start being a little more prominent tomorrow, and we might not see the gains that we've seen on the Nifty today? Maybe some position squaring off. Is that something that you're forecasting for tomorrow?
So I think we would see another day of consolidation in the markets ahead of this US tariff deadline, and even we have a midweek market holiday on Wednesday. And if we look at the today's activity as well, we have seen a positive opening itself of about 80-100 point, but post opening we have not seen any kind of follow-up trending moves happening. So I think just because until this clarity comes and during this midweek holiday, I think we would see some amount of consolidation in the indices yesterday with 24 in the indices tomorrow with 24,800 would act as a support on the lower side, whereas 25,000, 25,050 would continue to act as a resistance.
What about Nifty Bank? That one has been absolutely lackluster today. Any levels that you're spotting over there?
And there has been a relative underperformance in last 3-4 trading sessions where the markets have seen a pullback move, but that has not been supported by the banking space. Rather, in this entire pullback move, if you look at the sectoral indices, then it was the IT where the heavyweights have supported to lift the benchmark index higher. But banking space, I think still until we surpass that 55,800, 56,000 mark, the overall short-term momentum is not looking that positive. So on the lower side, 54,800 would be the support, and But no, definitely we are not witnessing any kind of strength coming in the banking for last few sessions.
In fact, from the Nifty Bank, we've slipped very marginally into the red. So that's the take on the market right now. Ashi and Rajit, thank you so much for joining us with your thoughts and appreciate your time today.